Good evening, everyone, and welcome to this unique and interesting panel called Banking on Bunkers. Thanks to Slide2Open for giving us this opportunity. We are going to share important insights from the bunker industry that will be useful to sustainability of the shipping community. My name is Irene Notias of Prime's Bunkersplus, a bunker buying management provider service situated in Greece. And I'm co-moderating with Mr. Llewellyn Bankes-Hughes, all the way from London, the founder of PETROSPOT, an international publishing, training, and conference company focused on shipping, marine fuels, and publisher of Bunkerspot and Ship Energy that we all read and love. Hello, Llewellyn.
Thank you, Irene. Kalispera.
Kalispera.
Joining us on the panel, representing the bunker supply side of the business, is Sifis Vardinoyannis, Business Development Director at SEKAVIN Bunkering Stations. Representing the bunker buying side is Stamatis Xochakis, previously a bunker supplier with Makoil and now a bunker buyer with Tsakos Energy Navigation. Representing the bunker trading and credit sector is ex-Dynama, Lloyd's Intelligence and Standard & Poor's credit analyst, Amsterdam-based Kieran Brown, now Group Credit Manager at Island Oil Holding Limited. And representing the trade, credit and insurance side of the business is Makis Tzeis, Managing Director of the Greek branch of Atradius. So let's get started. Bunkering ought to be a very simple business, but it can be also a hugely complex business that many may not fully appreciate. A bunker stem may involve multiple parties and multiple contracts with a complicated string of financial arrangements and any number of operational and legal hurdles that all need to be considered before, during and after any bunker delivery. But before we look at the financial side of bunkering and how this is evolving, Irene will explain the anatomy of a typical bunker deal, the players involved, the process of buying bunkers, and the role that finance and credit play. Irene. Have we lost Irene?
I need the... Excuse me. Sorry, there's a little problem. I'm not seeing... Indeed, now, okay, I got the message now. Indeed, the business of buying bunkers seems simple, and yet it gets complex. The best way to describe the anatomy of the bunker deal and how finance and credit play a role is by this slide I created. It maps the procurement process of one bunker inquiry for one vessel, showing the supply value chain and how all these players are interdependent and how the banks and credit insurance are at the heart, fueling the entire process with money, basis credit. Buying fuel for one's vessel is competitive intensive and certainly not as simple as buying gas for one's car. After all, the buyer is buying a commodity, and there's a whole mechanism behind it, which is built on consistent relationships and credibility. There's a standard inquiry procedure that we all follow, and each inquiry is like working a mini project requiring lots of information, and time is of the essence. If you look at the diagram, you will see all the players. The buyer, in the blue circle on the left, is the end user. The other participants are part of the supply chain and each have a distinct role. They are the physical supplier on the right side, who sells fuel and is responsible to deliver the product to the vessels. The trader on the bottom, who resells the product and acts like a credit card, providing extended payment terms. And then there's the broker, like me, who acts as an agent for customers, helping negotiate and manage the inquiry process and after delivery. So the buyer forwards a bunker inquiry to the supply chain to get prices from at least 3 to maybe 6 sources. And those 3 or 6 sources may go to another 1 or 2 sources before they reach the supplier. Therefore, the suppliers view the same inquiry from several channels. Price offers are different for each inquiry because there are no firm price lists of the day. That's because prices may change every minute, being driven by crude future movements actually, and avails of product, among other variables. For many traders and suppliers to be price competitive and get the deal, they must have volume, take positions, and hedge. So their business deals are linked to the derivative markets. Furthermore, to maintain cash flow, most suppliers pledge the purchase orders, which are called nominations, to the banks. So for the buyer, it's all about who gives the lowest price to fix the deal. For the supplier and the trader, it's about who's paying for this deal. The who's paying the bill for any seller is as relevant as timely deliveries are for any ship owner. Therefore, the price offer is not entertained until the buyer's account is accepted. So to be accepted, sellers and suppliers who are being financed by banks must have clearance by their banks and credit insurance in advance So that's where due diligence comes in, audited financials, and know your customer reports. All this is taken for granted as we're waiting for our prices. Thank goodness we don't deal with this process when filling up our cars at the gas station. And speaking of gas stations, the physical suppliers are obligated to pay cash at the refinery when they are lifting product to deliver to the vessel. Yet they're expected to provide end users with 30-day credit lines while they're exposed and the fuel is being used. So you can understand why it's crucial to the suppliers and the traders to know their customers' credibility and that they will pay consistently within the agreed terms in advance, whether those terms are 21, 30, 45, or 60 days. Therefore, besides a pricing process based on derivatives, finance, credit checking, and credit insurance are part and parcel of the anatomy of the bunker deal. Okay, Llewellyn, I think I covered the basics. Let's begin the discussions. Back to you.
Okay, thanks, Irene. That was the quietest you've ever been when you started that one off, so that's very much appreciated. Anyway, 2019 and 2020 proved to be a rollercoaster rides, but things did not quite turn out as expected. In the run-up to the IMO's sulfur cap, there were fears that the price of compliant fuel would surge and remain high. For a short period, bunker suppliers enjoyed a bonanza and everyone predicted a credit squeeze, but prices fell back, disaster was avoided. Now, though prices are rising again and things could go quickly sour. Already, we've seen banks and credit insurers deserting the bunker business, and I've seen some high-profile bunker suppliers disappear. So what should we make of it all? Looking at the credit and insurance side of the business first, I'll turn first to Makis Tzeis of Atradius. Makis, since the downturn of 2008, banks and trade insurers have been increasingly reluctant to finance bunkering, the OW Bunker's demise in November 2014 and subsequent legal problems having taught them a few lessons. But then last year, Hin Leong and GP Global, on paper at least two solid suppliers, seem to have accelerated the withdrawal. Is this as serious an issue as it appears? And if so, what are the consequences and what conditions will be needed to entice the banks and insurers back? Also, while we're at it, how important is it that suppliers insure their accounts? That's for Makis.
He's not being heard.
I hope you hear me from well.
Oh, we didn't hear what Makis said. Makis, can you repeat that?
Hello, can you hear me now?
Now we can hear you. Please repeat that. Go ahead.
I said, okay, I hope that it's now fine. I just started by saying that bunkering has always been an attractively difficult sector with a number of peculiarities. However, I must say that credit insurers, were not exactly reluctant for this sector, but rather a bit more alert. Because we, credit insurers, do not demonize an entire sector just because this is difficult. We are not dogmatic about that. Besides, there are always good companies in difficult sectors and bad companies in booming sectors. Right. And this is exactly what signifies the value of the credit insurer, which is exactly to successfully evaluate the credit worthiness of every buyer. And at least this is what we do. In this way, we have a lot of
okay, we're having a problem with the sound. There's a problem. I don't know if everybody heard. Did everybody on the panel hear what Makis said towards the end?
No, it was very difficult to hear.
Most of it, yes.
Yeah. How about if we'll come back to Makis, if whenever we can hear, maybe somebody else can jump in so we don't waste the time. And then, because Makis, there's a, it's like a, I don't know how to explain, an echoing or something. I can't explain it. But you have so much valuable things to say, and you want to try it one more time? We heard what you said, but towards the last sentence wasn't clear. Please try again one more time. The last thing you said, if you remember. Llewellyn, maybe you could help
I was saying that, yes, I do not know up to what point did you hear me, but I was saying that we do not just kick out an entire sector because this is difficult. Now, as far as OW is concerned, I hope you can still hear me. As far as OW is concerned, for me, this case was like a myth buster.
Right.
And this surely taught us a number of lessons. The first lesson is that there are not companies anymore which are above any suspicion. We also learned that there is a certain risk of default for each company. Of course, not all companies are equally risky, but there is always an element of risk behind every company, which sometimes may collapse for a number of reasons, such as bad management or other external factors. And all the above drive me to the last part of your question, Llewellyn, regarding the importance of credit insurance, and which for me is of a paramount importance,
Yes.
especially in such an industry like bunkering, where all stakeholders are highly interconnected, like Irene mentioned before. And the number of benefits, there are a number of benefits. The primary one, the obvious one, is that the supplier will take his money back in case his buyer goes bust, like what happened with OW, or even if the buyer just delayed to pay the money. The second one is prophylaxis. Besides, in most cases, the credit insurer provides a pre-warning to the supplier in case his buyer starts to become riskier and riskier. So we slowly take him out of the risk and so for him to decrease the sales or even stop the sale. And finally, the final benefit, which for me is really, really important, is the financing. Not many do know that if you have credit insured your receivables, then you may assign these insured receivables to financial institutions like banks and or factoring houses in order for you to get cheaper or easier working capital, financing, which is pretty important for an industry like bunkering, since everybody operates on a razor thin margin.
Interesting.
Yeah, I'd like to pick that up with Kieran, actually. As Kieran is a representative of both the bunker supply and trading side of the business at Iron Oil. Maybe you could shed some light on the practice of pledging in receivables to the banks. It didn't used to be much of an issue before the collapse of OW. Now it seems that suppliers are more or less obliged to assign their account, otherwise they may not get any funding. What's your experience in this regard?
They were obliged before OW. OW just brought it to the fore. As Makis said, if you can insure your receivables, then you may as well use them to help you generate cash flow. It's a positive thing for clients because if as a trader we have to buy on cash in advance from a supplier, if we have that working capital with say an asset-backed loan or a factoring agreement, we don't have to pass on all of the costs of that in terms of margin to the client. It gives us some more room. Almost all of the larger traders and suppliers have some form of financing in which their receivables are pledged. The smaller players are at a disadvantage here if they don't have that because they're reliant entirely upon supplier credit, which is more expensive and not always guaranteed to be there. But it's a feature that's here to stay, and I understand that even some private equity companies are now pursuing some of the smaller traders, trying to offer them a type of trade financing as well.
Okay, well maybe Sifis, as a representative of the supply side of the business with SEKAVIN, could you let us know what impact the reluctance of banks to engage has had on the supply side? Has it become more difficult to finance your business, and if so, what measures are you taking to overcome it?
So I would like to expand basically on Kieran's points as well, as it's certainly more difficult to finance a business, but keeping everyone in the loop, let's say, and being open on how we operate and manage risk at the end of the day has made it easier these days to finance a business and at the end of the day provide some value to our clients. But basically, transparency and engagement with everyone is key.
Okay, I'm sure not every supplier out there will be pledging his invoices or taking out expensive credit insurance unless there are absolute requirements of the banks and the money men. Stamatis, as a representative of the buying side, now with Tsakos Energy Navigation, but previously for some time on the supply side of the business with Makoil, could you share your experience of dealing with pledged invoices and credit insurance from your side?
Of course. On the buying side and my experience here, there is always a short period of time that the market and is nervous and there is tightness. And if we do have a bankrupt supplier that has a big market share, then the rest of suppliers trying to take advantage by raising their margins. Going forward to that, there is the pledging the invoices, their invoices to the banks in order to have their credit insured, and that they will not face any problem on the cargo replenishment. So we do face that, especially in big markets, in like Singapore, where we do have to, sign a deal that banks are taking the money from this from one banker supply, and then we do request the confirmation from the buyer that he doesn't have any payment any from us waiting, and yeah, this is.
Can I intercept,
Okay.
Llewellyn, just to add that
Yeah, sure.
as a broker, we're seeing these NOAs, notices of assignment, and where our buyers the company has to sign over and to accept these things. Whereas when it first started, we weren't seeing these NOAs, so now it's becoming more transparent, which as a broker, I cared about my customer knowing that his nomination was being pledged or hedged, pledged actually. Thank you.
Okay, let's look at a little bit at credit lines. I mean, 2020 proved not to be as onerous as anticipated in terms of credit crunch, but should oil prices rise significantly, as many see now as a distinct possibility, will the credit issues that had been expected a year ago suddenly hit hard now, or is the system sound enough to manage? I wonder about Kieran, who's a very expert credit manager. From the point of view of supplier and trader, are you having to offer credit lines to bunker buyers, presumably on a daily basis? I'm guessing that the more transparent and forthcoming the buyer, the easier it is to know the counterparty and therefore to be in a position to offer him credit. Can you talk us through the process of granting a credit line to a new or returning customer?
We can't hear you.
Long to talk about on. Oh,
Repeat
can you
that.
hear me?
Oh.
Repeat it. We couldn't hear
Yes.
Can you hear me now?
you. Yes.
Yes.
Can you hear me now?
Yes.
Okay, great.
Yeah.
The entire process would take way too long to discuss, but the important thing to remember is that you can't make a decision about credit unless you have some information. So sort of inherently, the more information you have about your buyer, the better position the buyer is in. Even if a company, say they do provide you with their financial accounts, let's say their balance sheet, it's not great, but it's also not the end of the world. Well, from a credit point of view, at least sort of the basic parameters of this company, and you're a lot more comfortable giving them credit because you have more knowledge than you would if you had no financial accounts at all, or no credit report, or even no knowledge of who the ultimate beneficial owner is. So we take all of those things into consideration, plus obviously our own records if we have any. But if that information is absent, then we kind of have to make a decision without much information. And in that case, we're going to be cautious, generally speaking.
Right.
Okay, I mean, to move on to his advice, Stamatis, you've been in a position of granting credit lines with Mackerel, but now you see this from the other side of the business. Is it now tougher to get what you want, or do you find that your company is sufficiently well known and trusted to achieve what you need?
Regarding my company, I mean, we're in the business. Tsakos family is in the business since 1970. Tsakos Energy Navigation is a listed company in New York Stock Exchange, in the market since 1993. So we have a reputation. So we do not have a problem having open credit lines. Now, regarding what we are facing currently is the KYCs from different suppliers, the big suppliers that and the different regions that we always have to fill, and in order to do some in order to trade with them, and the speed of evaluation is something that is the main concern of ours.
Okay, it's just it leads into Irene as a neutral broker, presumably having to deal with the supplier and the buyer to find common ground in order to do the business. But with KYC all pervasive, has the task of sorting out credit checks, due diligence, trade references, bank references, money laundering, and OFACs and all these other things become more difficult of late? If so, in what way?
Well, it's not enough that we have to find the right price. Now we have to find the right avails, the right product. We have to find the credit line for the customer. As a broker, we don't buy and sell. We use the trader for that. And with our customers, which we call clients, we care that they can sustain their credit lines. And we've had difficulty recently, actually after OW and after the capital controls in Greece, where even the credit lines that we did have for our big companies were all frozen. So there's a lot of things that go into play, which I explained a little bit before. And yes, it's very difficult for us during the day to try to retrieve all these we know our customer, but all these like showing their underwear kind of thing, with the audited financial statements for small and medium-sized companies is not so kosher, I can say in my Brooklyn talk, for traditional families, family-owned businesses. Now, the younger generation, I've noticed that they are more, or I should say less reluctant to show them, because moving forward, they really understand and they get it that this is the way business is done nowadays, and finance takes a big role, plays a big role. Because we only have about 8 minutes, by the way. We only have about 8 minutes, so we should go towards.
8 minutes. Okay,
yeah.
let's go on to Sifis then. Wonder if Sifis noticed any change in the amount of credit you're now handing out versus a year ago in terms of amounts or numbers of buyers requiring it. You're still happy to offer flexible terms, or have you clamped down lately? And what would a buyer have to do to make it more likely that you would grant him some credit?
So it always depends on the client and the information we have in hand, certainly. But given also the competitive landscape, that changing credit terms is not always an easy thing to do, as even if for smaller clients with high risk, there's always some competitor that looks to take the client from you. So I would say I haven't seen any huge differences in credit terms, especially in Piraeus at least. But in terms for new clients and new businesses, we are always flexible and looking to accommodate our customers, but we certainly need more information on how they operate and possible risks at the end of the day.
Okay, well, Makis, assume that transparency is a prerequisite in terms of information required. Suppliers looking for credit insurance to cover himself against unreliable buyers. What advice do you give to a prospective bunker supplier, and what advice do you give to a prospective bunker buyer in terms of securing credit insurance and therefore enabling the deal to take place?
Definitely. Transparency is the key word, as you said correctly. And this is translated into our business because, as you may know, we provide credit insurance via credit limits. And in order for us, credit insurers, to provide a credit limit, we need in prior to evaluate the creditworthiness of the buyer. And how we do it? By using financial and empirical information. And this is how we arrive at what you said before, transparency. So we need transparent and updated financials of the end buyer in order for us to approve the limit on his suppliers. And it's the benefit of the buyer to disclose his financials to the credit insurer, because at the end of the day, he will enjoy a credit limit for free. So as far as for the supplier is concerned, he should timely inform all stakeholders in case he experiences any delays from his buyers. So when we become aware of this value of the empirical information, then we protect all other suppliers, and we will protect all stakeholders. So yes, in a nutshell, transparency and timely communication among all stakeholders is a must.
Okay, that's cool. Irene, do we have much time left? You have time for another question?
I think we could go to the next question, but I just wanted to say how this whole conversation, Kieran, you had said something once to me on the phone. We were talking about how customers would be paying less if they knew that if they paid on 30 days. I mean, can you say something about that? The longer you have credit line, the more expensive the price is, because a lot of people think they're buying, cheap when they're really buying more expensive when they have. We can't hear you again.
Now
I hear you.
All right, can you hear me now?
Yes,
If,
yes.
if you're, I think it begins with a slight delay. If you're asking for 45 or 60 days, then I mean, the supplier has to, factor in their own costs, and of course that's going to get passed on along the margin. But in terms of having easier access to credit, it's not so much about the terms as it is about communication. So if you've got a client and they can only pay on 45 days because that's how the business is set up, that's fine, as long as they consistently pay on 45 days. Some clients, their cash flow is quite unpredictable, so they don't know if they can pay on 30, 45, 60, whatever it is. In those cases, as long as the client's like telling us what their business is, this vessel's on a voyage to do this, they're going to deliver this to this port, this vessel's coming off time charter. If they just talk to us and we can understand their business and their sources of cash flow, even if their payments are inconsistent, we can usually find a way to make it work. So it's really about communication.
This is very valuable to know. Llewellyn, I think we have 5 minutes.
I think definitely maybe on do you have time for the last question?
I'd like to ask the people who 5 minutes, yeah. So we can wrap it up.
Okay.
Maybe somebody can answer the last question,
Okay.
and then we'll just say our good nights.
Okay, the last question basically is about big versus small, and to what extent are smaller bunker suppliers, maybe niche markets or single ports with loyal customers and a long history of excellent service, now under threat from lack of bank finance, compounded by the ever-growing presence of large, heavily funded trading houses with strong balance sheets, who are lapping up smaller competitors and muscling on their business. I wonder maybe Sifis, as a small bunker supplier, or a growing bunker supplier in Greece, are you seeing people moving into your market to try to bite off a bit of your business?
He's our big one here
What do
in
you
Greece, though.
So I think that's a reality everywhere. And in the case though of smaller markets, or let's say smaller ports, I think the value of the local supplier is higher. Basically the way I see it is that a local supplier is positioned as a partner to a larger trader, being able to provide the value to the bunker supply chain at the end of the day, and leverage the local expertise to everyone's benefit. So in this case, I would say we, as a local supplier, that you might feel safer, let's say, but I don't know what safety means these days in many cases.
Oh, exactly. Stamatis, you may agree that there's some excellent small companies and some very weak big companies. When you're making the decision to select a supplier, apart from his ability to supply the fuel you're looking for, what other parameters might you consider before choosing, assuming that a choice is available? What are you looking for?
Yeah, of course, the reputation of the supplier is something that we look into it. Definitely the quality nowadays is a must. We have to secure that we do have a good product because you do know the problems, the issues that we faced in 2020 and during the change from high sulfur fuel oil to very low sulfur fuel oil. And last but not least, of course, is the price that the supplier is offering to us.
Yeah, that's fair enough. Irene, you look a bit agitated there.
I think we're there, so we can say, well, I want to thank all the panelists, Kieran, Stamatis, Makis, and Sifis, and thank you to this great panel, Llewellyn, for sharing your expertise and insight into the financial side of bunkering. As you have heard, bunkering can be very simple, but also very complicated. The key is transparency, cooperation between the suppliers and the buyers and the traders and the brokers. The more trust that each party has in the other, the more streamlined and successful the bunkering transaction will be. And the greater understanding each party has of the constraints of the other, the better it will be for everyone. But if there were one piece of advice that I am sure all of our panelists would offer, it would be this: know your counterparty, be as transparent as possible, and always pay on time. Thank you for watching us. I wish everyone lots of health and safety. Good night. Good night from Greece.